His view of that was that he was taking back that edge that the casinos always have over you. So yeah, it was kind of unrigging a rigged system, I think, in his estimation. And so he's like, what's most similar to this? Where can I take these skills of, finding an edge, finding this way to outsmart a system? Where can I apply that? And his answer was finance, which I think is very tidy. I think a lot of people object to that, but I do think it's right, and he proved it.
My guest today is Mary Childs. Mary is a co-host and correspondent for NPR's Planet Money podcast. Before joining NPR in 2019, she was a senior reporter at Barron's Magazine, where she covered the alternatives industry, the bond market, and capitalism. Her latest book is The Bond King: How One Man Made a Market, Built an Empire, and Lost It All. Bond King is the story of Bill Gross, a whiz kid who founded PIMCO, which is one of the most powerful, secretive, and cutthroat investment firms in the financial industry. Gross went about reshaping our financial system in the aftermath of the Great Recession to his own advantage and gained legions of admirers and enemies along the way. I recently sat down with Mary, and we talked about how Bill Gross's ambition would also turn out to be his undoing. Mary, thanks so much for coming on the show. I was looking forward to it when we spoke. I think it was about a week or so ago.
Mm-hmm. I'm so excited to be here. Thank you for having me.
Okay, folks, the name of the book is The Bond King: How One Man Made a Market, Built an Empire, and Lost It All. So, Mary, first off, how do you get into bonds? Isn't bonds always perceived as boring and really staid and So how did you fall into that?
I think part of it was just, I interned at Bloomberg News, and Bloomberg is institutionally, just its DNA is kind of bond-y. The bond market, Michael Bloomberg himself kind of came up in that world. And I think that is just woven into the company. And I didn't consciously perceive that as a motivation at the time. But looking back now, I'm like, of course, that's kind of what happened. But there is this sense, that some of the reporters on that team, on the bond coverage team, were just like ferociously smart. And I was like, I want to be like that. I want to be ferociously smart like that. And there's so much to do in the bond world that it did feel to me like there was more to muck around with. And randomly, when I started at Bloomberg, there was an opening to cover the credit default swap market. And this was after the crisis.
Oh, it's after the crisis?
Yeah. So it's like no one wanted to do that job because it was like, like the fireworks already happened. And I was like, okay, let me have it. Like, I'll do it. And, again, it's the kind of market where people are like, this is so boring. It's just like refreshing models and Excel spreadsheets. And of course, some of that is true. And so much of that is just not at all applicable. So it was really fun.
All right. Super. So now also you're the host of Planet Money, NPR's Planet Money. And that's like, what is that? One of the top 5 or 10 podcasts out there? Wow.
Thank you. Yeah.
Wow.
Yeah. It's really fun. It's a fun team, and it's so different from the kind of storytelling I was doing before. But it is this kind of attempt to unpack the economy and the systems that make our world run in a really accessible and curiosity-driven way.
Nice. I listened to some of those podcasts, especially the one on carried interest. Really good stuff.
Thank you. Appreciate that.
It. Okay. So you wrote this book, The Bond King. By the way, is this the first biography of Bill Gross?
There's another book sort of inauspiciously also titled The Bond King from 2003, I think. And that one was much more, in my view, the kind of enormous influence that PIMCO would accrue really hadn't come to fruition in at least quite the same way. And so that's the only other one that I'm aware of. There are, pieces here and there, and he had a sort of his own book that had biographical elements to it. But yeah, this is substantially, twinned with its cousin, the other Bond King. This is kind of the first.
Okay. So because I was in finance and managed money and all, I've heard of Bill Gross. I've heard of PIMCO. Never really fully understood how a blackjack player, I think the guy was in his, the 1960s or so, was counting cards, blackjack player. He takes a boring section of the market, which is bonds, turns it into something fascinating, builds PIMCO into a $multi-trillion, I don't know how many some assets, yeah. As the U.S. government confers with him, the Federal Reserve talks to him on what they're selling in bonds, and then he has a dramatic fall. But before we get into dramatic fall, why is it so important to know who Bill Gross was? Why is he Why don't you write a book about this guy?
I think the most kind of salient thing to me is, he's really fascinating. And as finance figures go, he's incredibly reflective. So, insofar as you want a protagonist or a character to be able to kind of shepherd you through all of the machinations of these incredibly complicated structures and things that, like, ostensibly could be boring, as we've said, you want someone who, you really want that person to be engaging and compelling and not just like a stick in the mud or a jerk or, something without nuance. So, to me, the fact that Bill is this reflective person and does strive to kind of understand his place in the world and talks openly about that, all of that made him really a rich kind of character from a narrative perspective. But kind of more to the point, I think the bond market and, finance itself both are tend to be moded with jargon, right? And to some extent, this is just a byproduct of people doing it for their jobs. And like, you get tired of saying commercial mortgage-backed securities all the time, and you're just going to make an abbreviation. But at the same time, it also serves to kind of ostracize people, to alienate people who might want to understand and who I would argue need to understand in order to be kind of active participants in our society. And it enables those people that do understand the jargon and kind of keep that moat, that they can charge higher fees to those people that are not on their side of the island. And to me, that's really frustrating and annoying and a little bit of a scam. So it's like, you should have access to this information. You should be welcomed into this information, into understanding better the systems that dictate so much about our economy and our lives. So that's the kind of big pitch. I feel like I can get a little bit soapboxy, so forgive me, but it's also the mission of Planet Money too, where it's like, this stuff is perfectly understandable. You just need a minute and you just need an access point.
Right.
And for me, Bill Gross's narrative really was that.
Okay, so let's start not at the beginning, but somewhere where it really gets interesting. So here's a guy fresh out of college, right? Yeah. I don't know, he takes a couple $100 or so was his net worth. He starts counting cards. I think it was Vegas. I was thinking like one of the bars there, casinos rather. He goes to the casino and he builds up, he starts making money.
Yeah.
And then he starts thinking what?
He starts thinking, how can I replicate this? How can I take what I've learned here, which is to feel risk, to calculate when the odds are in your favor, and to kind of know with some reliability when the odds are in or not in your favor. And he did that through counting cards, right? And that was kind of his view of that, was that he was taking back that edge that the casinos always have over you. So yeah, it was kind of unrigging a rigged system, I think, in his estimation. And so he's like, what's most similar to this? Where can I take these skills of, finding an edge, finding this way to outsmart a system? Where can I apply that? And his answer was finance, which I think is very tidy. I think a lot of people object to that, but I do think it's right. And he proved it.
Later on, one of his mentors or one of his idols at Thorpe was also a card counter, dealing with that. Yeah. And, Warren Buffett was also a horse player, handicapper. So when you figure out the numbers are numbers, and you figure out where you have the odds. And, Charlie Munger, Warren Buffett's partner, said, investing is nothing more than trying to find the 2-to-1 favorite that's going off at 10-to-1. Mismatch odds. That's all you're really trying to find. And no one did it better than Bill Gross. So he starts making money. He says, okay, I'm going to take this magic, if you will, and start to apply it to finance, because they don't throw you out of the casino. There's no limit. There's no upside. And your advantage sticks. In fact, your advantage becomes a competitive advantage over other investment houses. So what does Bill Gross do at this point?
So he starts at, he goes to business school. And after he gets out of business school, he goes to, with some delay, he goes to Pac Mutual, a life insurance company, which again, like you're saying, it was this kind of like buttoned up, formal place, very corporate, very staid. And he goes in as he's a credit analyst, and part of his job is literally clipping coupons off the bottom of bond certificates to mail in to get an interest payment.
Right. Well, folks, hang on a second, Mary. Back in the day, for those of you who remember, you actually had bonds and you literally were clipping the coupon. You actually clipped the coupon. And I remember back in the day when I first started on Wall Street, there was just really at the end, there were couriers carrying satchels of like zillions of dollars worth of these bearer bonds through the streets. And it was like, and someone told me, see that guy? He's carrying like $3 million. What are you, crazy? He goes, nope. And just follow him and watch him. And that's what they did. It was just amazing before electronic movement of money.
It's so radical to think about now that this was just a tangible, literally hands-on business. I think of it as arts and crafts, which is like that's just so far and away, like so different from what it is today. But yeah, and the thing that kind of turned this upside down was at the time, there was this guy in Southern California, Howard Rakoff, who was going around kind of trying to recruit people to trade bonds with him. Inflation was really high, so there was a very strong argument to get rid of, old bonds whose value was eroding and buy new bonds, or, trade around into a company that you liked better, who was better positioned to capitalize on whatever.
Right. So bonds, just to clarify for our audience, is when the interest rates go up and you have a bond that pays a 3% coupon, and interest rates are starting to go up, the value of this bond, who wants a 3% bond when I can make 5% over there? So the value of this bond shrinks. You still get the 3%, but the bond, if you hold it till maturity, you get your money back. But during the time between now and maturity, a lot of stuff can go on, right? And that's what this guy starts to say, wait a second, we could trade that.
That's exactly right. And I love the way you put it, if there's a 3% bond, why do I want that when there's a 5% one available? It's like the ultimate real FOMO. And that does have very tangible and real consequences in the bond market. So Bill Gross, his boss meets with this guy, Howard Rakoff. And the boss is kind of like, okay, man, whatever. But why don't you come meet with some of my young whippersnappers? You might get along. They meet. And, this is kind of the beginning of, in my mind and in my telling, the beginning of the active bond market when Bill Gross and Howard Rakoff meet. They start this lifelong friendship, but also a very lucrative business relationship where they trade with each other. And what ends up happening is Bill pitches to his boss, hey, can I just have a little bit of money to play with and see what happens? And he's off to, basically start PIMCO from this little shell corporation within the larger life insurance company with just a little bit of, spare change, basically.
And what does PIMCO stand for? What is that an acronym for?
Pacific Investment Management Company.
Yeah, pretty boring.
I'm always like, should I capitalize the O?
Yeah.
It shouldn't be, right?
Right. It's nothing fancy, folks. It's pretty boring stuff. And Bill Gross sees an opportunity where no one else saw an opportunity, right?
Mm-hmm. Yeah. Yeah. I mean, if you think about how well the thing was working before, this is an insurance company, so they know with some degree of certainty when they're going to have to make payouts to their claimants, right? And bonds provide the opportunity to just know when your money's coming in. So you can match those up so nicely if you're this company. And so the idea of disrupting that beautiful balance of your money coming in at this schedule and your money going out at that schedule, it just introduces volatility and risk and potential for loss when you kind of didn't really have it before. So there was this institutional I don't know about that. But, if you're putting up numbers like Bill and his team would, it's hard to argue.
Okay. So Bill starts this company within a company, if you will, and they give him pretty free rein. How old is he at the time? He's in his 20s, I think, right?
Oh, he's in his 20s, yeah.
Yes, he's a young guy. And he's one of the few people that, money managers that I think he served in Vietnam, right? He was a veteran.
Yeah, the Navy.
Right, in the Navy, yeah. So he knows, he's seen, I don't know if he saw combat. Do you know that or not, if he saw combat?
He's talked about it a little bit in his investment outlooks and in interviews. And it seems like he was in a boat near a little take the people to the shore, and he was sort of just babysitting the little boat while other people were on land.
Right.
It sounds like he was near some combat, but not super in it.
Okay. But he learns about risk, reward, pressing the edge, and not from playing blackjack, as well as military experience. He has that discipline. And he goes and he has the nerve to say, I want to start and I want to shake up this. I want to be an innovator in this segment of the market. And just impress upon us, Mary, how huge is the bond market?
Oh, it's enormous. I mean, it's trillions of dollars. I haven't looked it up lately, but it's just staggering, the size and the dominance of it, the kind of influence of it. This is how governments and companies fund themselves. This is how they fund operations, how they, pay for a new factory or a new equipment. This is how companies, how governments, put out programs, pay for their own functioning and pay their workers. So I think that, the influence and importance of it sort of is hard to overstate. And it's outshone by its, I think, younger sibling, smaller sibling, the stock market. The stock market's more accessible for people like you and me to just dip in and out of and trade on our little accessible TD Ameritrade, whatever accounts. Whereas the bond market is much more institutional. It's much larger sums of money flying around at one given time.
Okay, so he starts at somewhere around, I don't know, 1970s or so, right? 71, 72.
71 is, yeah, the
71.
inception date.
Okay, so he starts this little thing, and all of a sudden it just grows. What's the magic of it? Why is money attracted to him? Why is he making money where nobody was making money before?
Oh, such a good question. There are a bunch of different answers. One is they were very good at marketing. Bill Gross himself is actually quite good at marketing. He doesn't love the kind of person to person engagement in client meetings, but he'll do it and he's good at it. And they also had a dedicated client services person, which was a bit radical at the time. And that person, this guy, Jim Muzzy, who's like so warm and fuzzy, just a nice, warm person. He really understood the market too. So they had this very informed person in client services as well, where I think it was kind of less seen at the time as a value add to have someone who knows what they're talking about in client
Right.
services. So that's kind of a structural part of it that was helpful. There's also, I think Bill brought that kind of beat the machine, beat the system mentality to the market, and that certainly helped. But I think one of the main innovations that he brought was just being really aggressive and early to a new market. So whenever there was a new market or a new product, whether it's emerging markets or, inflation protected securities or mortgages in general, the idea at PIMCO was if there's a new thing, we jump on it. And so he very much did this, and being early to financial futures and to mortgages provided a lot of extra outperformance over decades for them.
Right, and he also does it at really a great time because you have inflation starting to kick up. The United States goes
Right.
off the gold standard.
Right.
So look, Bill Gross would have been Bill Gross without this, but boy, what a tailwind he had.
Absolutely true. And this comes up a lot. This was sort of the most fortuitous period to be in the exact seat that he was in for decades. This is a long stretch of time
It's a long wave. He rides this
it's
wave
a
for
long
30,
wave.
40 years.
Exactly. And he definitely knew that and talked about it. And I think this is, one of the knocks on him is that he had so much the structure around him, the situation, the environment was so conducive to his success that, was he really such a genius? Which I think is a little unfair, a little bit,
Yeah,
throwing rocks at your
find
heroes.
right.
But
I find that's always said by people who missed out. Right? They could
yeah,
in 1971. There were a lot of smart people that could have done it but didn't.
right.
He did it, so he gets the credit.
Exactly.
That's all.
Exactly right. I completely agree with that. But it is, it was an undeniably fantastic period to be a financial investor. And, in his seat, in Warren Buffett's seat, in all of these various, influential roles around the market, it was great.
Yeah, well, Munger and Buffett say if they started, 30, 40 years later, 20 years later, they could not
Right.
have had the structural advantages that they had. They were dealing,
Exactly.
Buffett was going around buying shares from farmers who had no idea what the value of their securities
Right.
were. You just can't do
Right.
that anymore. The
Exactly.
information arbitrage is there. What happens is known immediately, and they were taking advantage of what people knew and what people did in the real information. And sometimes they were
Completely.
lagged by weeks.
Exactly. And I think someone at a conference asked Howard Marks what his best advice would be for investors. And he was like, start your career in the late 60s or
Yeah.
something like that. It's just like, okay, I'll be sure to do that. Thank you.
Yeah. And
Yeah.
what I find just on the side, since you deal so much with personal finance, and you probably hear this from so many people, is that they take their biggest advantage, most investors, which is time. They have the time. The institutions don't have the time because they have to report on a monthly or quarterly basis to beat the bogey, to beat a benchmark, whatever it might be. So they have to make their investment. But an individual investor, as soon as you start trading, you play in their marketplace. When you don't have to
Exactly.
trade, when you just buy and hold and ride these things out, your advantage is humongous. But so many people just trade it away.
I think that's exactly right. And, it's hard when the market's plummeting to kind of keep your head about you and not do anything. But it is, and the best and I think worst investors would tell you that that's the time to be pouring more money into the market when things are just absolutely falling apart. Because that's, you don't really want to try to time the bottom. But I always laugh about the idea of averaging your dollar cost down. If you already have a position, you bought it at 100 and you buy more at 60, well, now your average price is less. Congratulations.
Right.
You did it. And that's a funny thing that investors will say to you if you're trying to write about their poor performance, for example. But it is a real thing. And it is one of those kind of, you talked about that kind of discipline from military experience and from, the counting cards in Vegas. And I think that's super true. The ability to just kind of regulate yourself and regulate your own emotions and your own engagement with the market is really difficult and really important.
It's all about temperament. If you don't have the right temperament, you shouldn't be playing this. You shouldn't be investing.
So true.
Stay to
So
money
true.
market, That's it. Okay, so not only does Bill Gross have and PIMCO have the structural advantage and have the customer in person and have a great tailwind, he starts producing returns that are just, I don't know what's a good word for it, magnificent compared to the benchmark, because you don't beat the benchmark by so much. You want to talk about that?
Yeah, this goes back to the idea, there was a lot of, credit selection and just literally looking at companies and saying whether this company was good and he wanted to invest in it or not. But what is more kind of intellectually delightful for me is thinking about the structural trades that he did. One being that, getting there early to certain markets, international and mortgages being, I think, the kind of most salient in that early track record. I'm talking like, 70s and 80s in here. And I think there's also, it's one of the tenets of what he called structural alpha, which was how he kind of characterized, it's not quite passive investing, it's not quite factor investing, but it's trades that are replicable, that are, identifying trends and themes in the market that are robust and persistent and that you can take advantage of all the time.
Give me an example. Give me an example, Mary.
Yeah, so one, selling volatility, for example. So if you think that there's no disaster imminent, that there's not like a war that could go, could explode in everyone's face, or there's not some, massive inflation spike. Like you have to have some degree of certainty in the near term. But if you have that degree of light certainty, now, of course, you can never quite predict when something terrible is going to happen. You can just say, all right, I'm going to sell volatility. I'm going to basically sell insurance, for lack of a better, more precise descriptor, sell insurance that says, okay, markets are going to trade within this range. And if it trades outside, I will have to hand over the money I was given for this, the premium. But I feel pretty good about it. And Bill was very good at predicting those ranges. And I think more often than not, that was a really winning trade for him and for PIMCO, was just saying, everyone else wants to buy this insurance because they want to sleep at night. I don't mind. I will sell it to you happily. I can sleep just fine.
Right. He had no problem being on the other side of a trade to sacrifice his sleep so someone else could sleep better, because they rewarded him pretty well for it. And he was right.
That's right.
He was right a lot of the time. And therefore he gets it. Okay. So PIMCO goes on and starts managing millions first, then tens of millions, then billions of dollars. Right. People are just beating a path to where he becomes basically bigger than the index. He becomes the index. The U.S., was it the Treasury speaks to him? I think it was in 07, 08 about a bond issue. Am I right on that? Or?
Yeah, they called him more or less for macro advice, for just like what even is going on and how would you play this and what do you think we should be doing. But, the headline of the Times article was Treasury's got Bill Gross on speed dial.
Yeah, right.
Because it was just such a tumultuous period and so centered around the market in which PIMCO was so influential and so knowledgeable that it really only made sense for them to be calling Bill and asking him, in some sense, they were kind of locked in this weird relationship where Bill Gross and PIMCO were enormous buyers of government paper, but also of Fannie Freddie mortgages, which were like quasi sort of kind of government backed. And that promise really wasn't clear. And so that relationship, I mean, I think every society has to make its compromises with, private credit markets and every, how much the government will do and how much the private markets will do. And in this case, it's just a weird intersection. And I think we didn't really, in my estimation, and, I'm sure people who thought very carefully about it at the time will beg to differ, but it just seems like we were like, yeah, that's fine that all of this is happening and that Bill Gross has such influence and PIMCO has such influence in this exact moment in history. Yeah, it's a weird time.
But we'll talk about that later. Let's talk about more about the guy. So one of the things that I found in your book just fascinating, that when Bill was interviewing people to work for him, he would ask, do you want to be famous, rich, or powerful? And when you first heard that, how did you find out about that, by the way?
He told me that. We were sitting over a pastry that he did not eat. And he told me that was his favorite interview question because it made people uncomfortable. It made them kind of squirm. They knew that there would be a right answer, but they weren't sure what it was. And any potential answer would reveal a vulnerability. And so he liked that made them uncomfortable and got a good answer out of them.
But I think it tells so much about the type of person he is, because his answer to that was fame.
Fame, always, yeah.
And how do you see that as part of the downfall?
Well, I think it's an interesting, the whole framing of the question presupposes that those are the only things, of course, and that those are the values that any person can have or should have, which is itself an assertion. And then it, leans into the one that really wouldn't lead you into money management, right? If you want fame, it's
Become,
just not
yeah, become an
right.
actor, you know?
Right. Go on TikTok.
Right. Go on
You
TikTok.
know,
Back in the day, there was no TikTok.
oh, was there not? Okay.
That
But
was not, yeah. We,
but there is this kind of tension there where he's in this unusual role for the aims that he had. He did a really good job with that. He became the face of the bond market. He became this influential figure. And it's sort of upside down to think that the bond market was just like the delivery mechanism for his, fame goal. Like that's what got him there. But it does end up sort of, fame is one of those things that you can't control the next headline. You can't generate the next headline exactly to your liking. And in a sense, for someone like Bill, it's just never going to be enough. There's never going to come a moment where he's like, all right, I have achieved it. I am famous. And like fame, the next person becomes famous and everyone forgets about you 5 seconds later. So there's an insatiability built into these priorities. And I don't know how much that's better in money or power. Like, I don't know if there's such a thing as enough money or enough power. But in this one, I do think that it wasn't exactly fame that he wanted so much as adoration. I think he wanted to be revered and respected and adored. And then when things were more critical, it was very hard for him to kind of incorporate that and accept that. There's some people who are like, bad news is good news. Like, my name's in the headlines. I don't care. And I don't think he's that kind of person.
he just thought it was a one-way street up, right? It wasn't going
I
anywhere
think
else
that's right.
there. And when it doesn't
Yeah.
work, fame, I don't care what the news says, long, good, bad news, as long as, I mean, it's not really so because,
Yeah.
there is bad PR. There is,
Yeah.
there is bad stuff that could be said about you. And it kind of what this is all I'm learning from the book. You met the man, you spent hours, days, months, I don't know, how long does this book take you to write?
7 years.
Okay, you spent 7 years sleeping with this
Thinking about
idea,
them.
thinking about this. I know how it is to write a book, and I'll never do another one. It just rips your
Yeah,
guts out. If you do it
exactly.
right, if you do it right, if you not do it right, you could get one out in a heartbeat. But if you do it right, you really, every footnote is researched, every conversation is mined. So here you have a guy where, as you're writing this, I'm reading the early chapters and knowing that his drive was for fame, it's kind of foreshadowing when that
Hmm.
fame is not there, and I'm not trying to psychoanalyze or anything, but when the fame is not there, he doubles down. He tries to, grab it and
Yeah.
I don't know, the business decisions, the people decisions, the life decisions, they're just not good ones.
They're not they're not good ones. I think that's well put. It is a weird thing because I think, he had this persona that was so effective for so long. And somehow in 2014 that changed. And I think that either he like missed a trick and wasn't able to see that that had changed and how to like reintegrate the new elements or how to, he wasn't able to pivot in a way that would work. But I think he also kind of, it just made him spiral. Like the ways that he dealt with that only made things worse.
Yeah,
He
yeah.
would kind of bring all this stuff up at meetings when everyone's trying to do, job things like move the company forward and get the work done. And he's like, well, what do you think about, did we handle the Muhammad Ali resignation the way that we should have? Like, let's do a post-mortem on this thing that he's clearly not over yet. And everyone else is like, we gotta move on, man. Like, this is not productive. And, in some sense, doing that kind of postmortem can be productive. And in another sense, it felt like it was more personal than professional at a certain point. And I think that was very frustrating for the rest of the people trying to run the company. But like, it's confusing for someone who had managed to keep himself together for so long. This same personality had been working for 40 years and all of a sudden it's a problem. And then it just like, it's like the dams broke.
I remember when this was happening, watching this, reading about it in the journal, and
Mm-hmm.
here's a guy who crafted his whole image for 30, 40 years or so. And I kept really contrasting it to Warren Buffett. It's like if Warren
Mm-hmm.
Buffett freaked out publicly, he would,
Right.
or I don't know, did some outlandish thing which is so un-Buffett like, you would
Right.
say, wait a second, who's the real guy here? Was that just crafted for the media and for me to be sucked
For
in?
me,
Yeah,
exactly.
and you felt, I wouldn't say betrayed because I never invested with PIMCO, or maybe I might have. I'm not really sure. Maybe one of the funds, but Bill Gross was the guy. So here you have an icon, a legend in the bond market. This guy was as big as Warren Buffett was in bonds. There's no question about that. In terms of his status, he was the guy. And to see him start to unravel, and really, I don't know, is that a good word? Would you say
I
that?
think that's right. Yeah. Yeah, I think that's right. And you're exactly right. I do think that a huge part of the problem was this difference between how he was perceived in that image that he crafted and then the kind of everyday experience of him, which I don't think he was super aware of that experience of him. And part of that speaks to, I think, when you're in power, especially for so long, and you become this legend, like maybe and you work so hard for the fame, like you see yourself as this like still hardworking person just getting the job done, like trying to get the best execution and the best trade ideas, whereas everyone else is like, oh my god, it's the bond king, oh, he didn't look me in the eye. Like your role changes and you have to notice that at a certain point, and I don't think Bill did. So people around him are like, this guy's kind of mean, like this guy's really brash, and he and the culture changed too, like, in the world, outside of PIMCO. So PIMCO didn't change, but the kind of context of PIMCO did, where we aren't really as keen on low-key abusive workplaces anymore. And the culture is that intense, kind of bearing down on people to get the best ideas. So Bill was not this like adorable folksy guy that we all had been watching on television. He is to some extent, but on the other side, he's intense and harsh and will kind of berate you in a meeting if he's trying to get to, he didn't notice that. And then once it all spilled forth, I do think there's this perception thing where we as news consumers and as people who, don't know Bill that well, but we see him on TV, I think everyone was like, whoa, is that like there's an element of he lied to me, right? Of he was putting forward this thing. You feel betrayed.
You said it right. You feel betrayed. You feel like, you're it's so weird to say, but there's a vulnerability because you start to link up with that guy. I know I have the same relationship with Buffett and Munger. If Buffett and Munger came out with something radical tomorrow to crush me, it really would.
Oh, no.
It definitely would.
Totally.
So,
yeah. No, I know.
So if Munger abused his wife, just can't
right.
even.
You would feel personally betrayed.
What are you, crazy? This is a guy,
right.
You want to feel that. And especially with Gross, for those, maybe I'll put a link down below in the description. You read his outlooks every quarter. They're just, I don't know, they're just he starts with songs sometimes. Just brilliant, brilliant the way he pulls so many different, elementary wisdoms all together. And he just makes it so easy to understand and folksy. And here you have a guy like, wait a second, that's not the same guy I'm reading about.
Exactly. That's not the guy I knew. And you feel that like the rug pulled out from under you. And I think that foments, that creates resentment and anger, towards this guy that was this legend. But it also, it just feeds more of it, right? People will start to like look for those stories, and then it's just like more and more comes out, and then all your behaviors get translated through that mechanism. Like if everyone's seeing you as bad, then suddenly you're bad all the time. And I just think that every time he tried to regain control of the narrative, some of his decisions were super misguided and like only helped to fuel the fire. But at the same time, even if he had executed perfectly, like I'm thinking of the Morningstar speech that he did in 2014, where the content of the speech was so good. It was all about structural alpha, the keys to the kingdom. This is what I did to help PIMCO outperform over decades. So good. But there was a little intro that was just basically unhinged and that really kind of freaked people out, given the context of this, media storm around him that just added to the fire. And people were like, I got to pull my money out from PIMCO because this guy's not making sense. So if he had turned the dial down on that and up on the structural alpha stuff, like, would he have been fine? Could he have recovered from this? Yeah, maybe.
Okay, so we talked about how one man made a market, built an empire. I think they were managing, I don't know, $200-300 billion, or I don't even know. Is that a right number?
Yeah, the flagship fund was about $300 billion at its peak in the mutual fund. Yeah,
300 billion.
It's wild.
So, right? Yeah, it's just amazing. And the last part is and lost it all. So, just walk us through that. How do you have And by the way, it's not a matter of money that he lost because he's still an extremely wealthy guy, right?
Right,
When you
right,
write lost it all,
exactly.
what are you talking about?
First of all, I so appreciate this question because a lot of people have been like, he didn't lose it all. He still has money. And
Right,
I'm like,
right.
and that's all there is? Like, you know, thinking about what Bill values, he valued his position in the markets. He valued the measuring stick of his track record. He valued being the bond king, I think. And he valued, the fame, the brand, the image, all that stuff we were talking about. Those were substantially, his goals. And I think it's pretty clear, no longer has those. And there's other collateral. His marriage fell apart with his second wife, and his relationship with the son from that marriage. It's super sad, and it really bums me out to think about. But he's started over. He's building himself anew. He got remarried, and says that he's very happy golfing in Palm Springs. So he's always reinventing and always looking for new ways to come to the table fresh. But I think, yeah, the world that he built over 40 years, this life that he built, including his home, his marriage, his commute into work, it was a pretty devastating couple of years, 2014 through, I guess, 17-ish. Maybe, no, 19 is when he retired from Janus and finally threw in the towel and just said, this isn't going to work anymore, and
Yeah.
gave up.
You touched, by the way, which I didn't bring up, his proximity to where PIMCO was,
Mm-hmm.
to his house. Why don't you share that with us?
Yeah, so he had this. I mean, he lived in this gated community in Laguna, very beautiful. I never went inside the gate, but you you can imagine. And he had this kind of, you drive along the highway for a little bit, you take a right, and he's at his office. And when PIMCO was considering other locations for its office when they needed to move into a bigger space, they talked about other places and moving the entire company maybe to a different state, maybe to a different campus. They considered places in Irvine. And in the end, it was just like, well, then we'd have to do something new. Then, Bill Gross wouldn't be able to just drive his morning commute. You get into a rhythm, you don't notice that you're driving the commute, you're thinking about other things, and having to take having to like wake your mind up to the directions that you're, and take a new right to Irvine instead of this one, and navigating all this new stuff. I think he was just uninterested in that. And they ended up moving from one building to about, I don't know, 300 feet away to their current building. So it was his was the vote that really counted here. And I think he was just uninterested in having to navigate a new morning commute, which is, of
Um,
course, a bit symbolic, right?
yeah, it's just unbelievable, right? So this was 2019. I think in 2019, you said he retires. And since
Mm-hmm.
then, what has he been doing? Have you been keeping up with him
Well,
after
a bit,
2019?
here and there. And it's one of those things where I sat with him for so long, for so many years, and he was so, so generous with his time. There comes a point where you're like, we're journalist and subject. We're not pals, right? This isn't like I'm not going to like get coffee with him just to catch up, which I think is good and appropriate, right? Like it's a pretty healthy separation and kind of boundary. But we email periodically, and I'm happy to hear that he's doing well. He actually wrote his own memoir, his own kind of narrative of his life and his accomplishments, and published it 2 weeks before my book came out. I think what happened there is my fact checker sent him a list of, facts to check. And I think he kind of took the measure of those and was like, that's not what I wanted. This isn't what
Mm.
I want. And chose to kind of make his own stack of facts, which is absolutely his right. And I'm glad that he did that. But yeah, I think he's been engaging on some of the meme stock stuff, which has been fun. He's continued to publish his investment outlooks. I think it's less than monthly now. It's more kind of when he feels like it. But those are still, what he thinks will happen and what inflation's doing and where the best investments are and so on and so forth. So
Right.
he's keeping at it in many ways.
Wow. So, Mary, let me ask you the last question. Why should someone read your book? Because they're looking at this, say, this book about a tragic figure. Is this a book about investing? What's this book going to teach me? Because I'll tell you before I give you a big wind up on this one, before I ask you an actual question, I always look at a book and I say, look, I'm going to invest 3-4 hours, sometimes more, 5 hours of my time. What am I going to be able to gain out of it? That's why,
Mm-hmm.
unfortunately, really, unfortunately, I don't read fiction that much. I don't read fiction, period. And that's a sad thing. But I always look at a book and say, okay, what am I going to gain out of this? So if I
Hmm.
asked you that book prior to reading it, I'm going to tell you what I thought, what I gained out of it. But when you wrote this, and you said 7 years, I know, man, it's a
Hmm.
lot of work, and
It's
it
staggering.
becomes it becomes a compulsion. You check
Absolutely.
everything. The person on the other end who's reading it, what message did you want to get through?
Hmm. I did sincerely want people to learn about the bond market, which I know sounds a bit bleh. But I do think this narrative is such a roller coaster that you'll have fun and you'll get off at the end of the roller coaster being like, oh, now I know what she was talking about at the beginning when I was a little bit like, I don't know. So that's a real goal is that people come away from it better able to answer questions and feel engaged in the world around them in that way. So there's like a real tangible
Okay,
kind of
but let's be real, Mary.
okay.
You could have wrote that book about anyone, right? Or it didn't have to be a person. You could write a
True,
book about a
true,
bond
true,
market.
true. Well, the thing that I've mentioned the kind of the reflective nature of Bill, and some of the people around him too. I think it does engender sort of a similar, when people know that someone else is talking about themselves in this reflective way. I think other people join in a bit. Um, and it's like this managerial King Lear, right? It's like this corporate showdown that becomes so petty and I mean, one of the things that I found somewhat cathartic is the pettiness in it, where it's just reassuring to know that at every income level and at every measure of success, like it doesn't get, humans are humans. Like we're just always going to be like, I can't believe that person disrespected me in this incredibly small way. And I'm not going to let it go. So that was, this reads like fiction, especially in the back half when it becomes more about that falling apart in 2014. And the thing to take away from that is it's made me think a lot about self-awareness and the gap between being reflective and being self-aware. And I think Bill was really reflective, and certainly no person can be fully self-aware. There's, of course, that's just not
That's why
possible.
we have spouses. Mm-hmm.
They're very helpful. That's so true. But I do think that's like, for me, that's been a big takeaway of thinking about how you're received in public and how, what everybody's bringing to the table that you might not know about, or what your actions are saying when you don't mean it. And it's been gratifying in recent weeks to talk to, or months to talk to people, who were in the room with Bill or were aware of what was going down. And they're like, oh, it didn't occur to me to think of it that way. I didn't know that Bill was thinking this. I didn't know that so and so thought that. And being able to kind of unfurl all of the complexity of human emotion and the kind of little petty disputes that we get ourselves locked into, that was cathartic and also sort of a cautionary tale.
Yeah, no, good stuff. When I read this, I'll give you just my take on this.
Please.
Is when I read this, I knew something of the problem. How it was going to end, because it was in the
Yeah.
papers and it was very public. But I never saw it from an insider's view, which you presented. So it's really great stuff. You did outstanding, really
Thank
outstanding.
you. I appreciate
Um,
that so much.
I learned from this: don't take yourself too seriously and be humble, because
Mm-hmm.
pride. Pride cometh before the fall. It's just a matter of when you try to live for fame and try to be famous, regardless, I know money you can never have enough, or power you can never have. There's a limit. There's a limit. But here with fame, it's insatiable.
Mm-hmm.
It's like the young, beautiful 20-year-old actresses, in Hollywood. Just another 5, 6 more years, there's going to be a new crop coming up. You will never, ever, ever be famous
Right.
there will always be some new, beautiful person coming up right behind you. So fame is fleeting. It's like, it's just, what Patton, I forget that. You just mentioned that when the general would come, the hero of the war would come, and he would be in his chariot, march through the streets of Rome. There would always be a slave next to him, as if this is all fleeting. It will
Yeah,
pass. It will pass. And you look at
it's
this.
true.
This guy had everything, but it still
Mm-hmm.
wasn't enough. And he cared more about his outer scorecard than his inner scorecard.
That's well put. Yeah. Yeah. And that's a discipline, right? Teaching yourself about that inner
You're just
scorecard.
not that important. You're just not that
Yeah.
important. And in the big scheme of things, it's how what you do for the world, not what the world does for you, because that's what
Yeah.
endures. And if you try to make it the other way around, eventually like in 2014 Morningstar, the mask will come off because you have to be,
Hmm.
it's, I don't know. That's just my take. I've just found throughout life that you can't be one way in public, one way in private. It just does not work out because eventually there will be that moment in time. And that's why I'm so really not amazed. I shouldn't say amazed. That's why I revere Buffett and Munger so much is because they've been consistent both in and out. And even when I
Hmm.
read Alice Schroeder's book, who I interviewed many years ago, Snowflake, there were people who wanted to say bad things about Buffett, but they're waiting till he died because they didn't want any retribution. But even the negative parts of it were still not so, I
Not
understand
so
it's
bad.
business. Yeah,
Yeah.
it was still something where I said, it's not so crazy. But,
Yeah.
uh, it's my,
It's like a matter of characterization where versus like something grievously unforgivable, like objectively unforgivable. Yeah.
yeah, I couldn't say it better. Yeah, yeah, that really is it. It was a speed bump. It really wasn't a new highway. That's the way I
Yeah.
see it. But I think I just even people who aren't into finance, who aren't into bonds or anything. Would you mention it's really cathartic to see everyone's human. You're right. And you're right, obvious. For those who aren't listening to this and
Thank
not
you. That was
human,
the
yeah.
scientific discovery that
Yeah,
I made.
great. Stating the obvious. So for those people who look at this, yeah, they're just like everyone else. And I guess we like to watch people in power or fame fall for the same things that we would. That's kind of human nature, unfortunately. But I think
Yeah.
what's great about this book is you you are not so judgmental. You're really balanced. You don't bang them over the head with a hammer. Would you say that that's more or less you try to fight that or
Oh, yeah. I try to fight that. I mean, I find it uninteresting if people are painted as caricatures. It's like, okay, I don't watch cartoons, so like, why would I be reading this? The thing that I think is interesting is when the people are nuanced and have motivation and if I'm judgmental, I can't. Not only can I not express all that nuance and difficulty that these people may be struggling with. I can't express it, but I won't get it. No one will tell me all that stuff if I'm judgmental. I can't, I have to, take whatever, assumptions and presuppositions I have about the world and about the people. I have to set all that aside in order to be a good reporter and go into basically their world, absorb what they think is important, absorb, whatever they really need to talk about, because there's always some like, great big thing that needs to get out. And if you can suspend your own kind of self in a way to meet them where they are, that's when you learn more about them and are able to actually communicate that
yeah?
information. And yeah, like I have judgments, but yeah, I'm gratified to hear that they're not in the book because it is really
Look,
hard.
I didn't see them. I didn't
Thank
feel
you.
look they're always going to be because you wrote it,
Oh,
but
sure.
I, I,
Yeah, I'm
I
a
thought it was pretty
person. Yeah, yeah.
balanced. I thought it was very balanced because there were times you could have kicked them in the head, but you didn't, and you could
Thank
have added
you.
your thing. So I think that's really shows a lot of restraint and just getting the story right. So, folks, the name of the book is The Bond King: How One Man Made a Market, Built an Empire, and Lost It All by Mary Childs. Mary, how's the book selling, by the way? It's out since what, March, April?
Yes, out since March. It's doing amazingly well. I'm so, so happy.
Did you
It's
think it was
actually,
going to
we
do this
are,
well? Did you think it was seriously when you're writing a book about
no.
bonds and the Bond King?
Yeah.
Like really?
I know. No, I was definitely nervous about it. It is about bonds. And every minute of me working on it, I was like, God, this book's going to be too late. All this stuff happened in 2014. Who's going to care? But it's sold so well, and people are being so kind about it. We are in our second printing
Wow.
already, which is amazing. And I'm just feeling really, really lucky. People have been really nice.
Second printing in only what 5 months, 4 months?
It was actually like the first week.
Wow.
Yeah, it was really,
Oh, so
really
your
crazy.
publisher didn't have much high hopes for that if they print you in the second printing, right? Where they print like
Arguable, yes, yes. They're like, this is a book about bonds.
we'll do,
No,
we'll
girl.
print, we'll print three of these and see how it goes, and we'll give her
Yeah,
one.
exactly, exactly.
Wow.
That's not what happened, probably.
Wow, continued success. That is absolutely outstanding. And folks could catch you on.
On NPR's Planet Money. I'm regrettably on Twitter, and I have a newsletter that I occasionally update.
And on NPR, you do a show, a podcast. How often?
I probably will put out one or two a month, sometimes three in a particularly busy month. But yeah, as varied as you said, carried interest loophole. We just did a show about the Inflation Reduction Act and to what extent it actually reduces inflation. Yeah, it's a kind of a wide range of economic concepts.
Beautiful. Mary Child's continued success. Thanks so much. I really
Thank you so
enjoyed this.
much. So kind. This was really fun.
Thanks for listening to this episode of The Charles Mizrahi Show. If you're a new listener, welcome. If you've been listening for a while, we're glad to have you back. Either way, we'd love to know what you think of the show. Please leave a review if you listen on Apple Podcasts. Reviews make it easier for others to find the show. You can also see the video of the interview on the Charles Mizrahi Show channel on YouTube.